everyone. Welcome to our special episode, Best of Startup Street 2022, where over the next 30 minutes, we will share our learnings from what's been a year of tough lessons for Indian startups. I'm Shruti Mishra, and I have with me my colleague Arundhati Ramanan. 2022 started on a great note for the Indian startup ecosystem, with 14 startups turning unicorns in the first 3 months as compared to 5 in the first 3 months of 2021. However, as the funding winter set in, the pace of startups turning unicorns dropped and only 21 of them entered the coveted club in 2022 as against 44 in 2021, according to data intelligence platform Venture Intelligence. After the 2021 boom, 2022 was a year of reckoning for Indian startups. It has been a year where the tenacity of startups was tested. It wasn't all about valuations, but about value creation, focusing on unit economics, underlined by a major funding crunch, huge losses, restructuring, and what has all of this led to? It's layoffs. 18,000 pink slips were handed out by startups this year. Arundhati, there were job cuts across sectors and across some of the most well-funded startups of India. Take us through the details.
That's absolutely right, Shruti. Weaker markets, global uncertainties, and the worry of a global recession put a spanner in the works for startups across India and the world in 2022. As of December 8th, close to 18,000 employees were laid off by 52 Indian startups, which included a whole host of unicorns and soonicorns. Of the total employees fired by Indian startups, 15,424 of them worked for edtech, e-commerce or consumer services sectors. It's not just startups. Tech layoffs across the world impacted 135,000 employees, with thousands in India in the potential line of fire. Meta, Amazon, Microsoft, Twitter, Netflix, and many of the global players handed out pink slips. Back home, SaaS unicorn Chargebee laid off about 142 people, or 10% of its staff, citing adverse macroeconomic conditions. Oyo Rooms laid off about 600 employees. Ola laid off over 1,200 employees. Cars24 laid off another 600. MPL laid off over 100 workers. Blinkit gave out pink slips to 1,600 people, while Meesho laid off 450 people. And I haven't even begun to mention the layoffs across the edtech space, the sector that struggled the most in 2022. So let's go across to my colleague Aishwarya Anand, who's standing by with how brutal the layoffs have been across India's edtech sector. Aishwarya.
That's right. After enjoying 2 years of hypergrowth when everything went online, the Indian edtech startups had to learn some tough lessons in 2022. Massive layoffs, shutdowns, raging cash crunch, offline shift, and most important of all, the search for profits. Edtechs account for close to 50% of the 18,000 plus layoffs at the Indian startups this year. That's about 9,000 jobs cut. Majority of the layoffs have come from the K-12 segment, from the most valued, most funded Byju's, Unacademy and Vedantu. In addition, players like Teachment, Eruditus, Practically and others have also cut jobs to cut costs. The edtech space also saw the most number of startup shutdowns this year, with Lido Learning, Trejo Fun, Uday, Super Learn shutting shop. But why are the edtech startups in deep trouble? Well, there are 3 major factors. Firstly, the funding winter. Edtech funding, which hit a record high of $4.7 billion in 2021, slumped to $2.43 billion this year. Only 2 startups in the space turned unicorn, that's Lead School and PhysicsWala. Secondly, profitability still remains elusive. Byju's, Unacademy and Vedantu continue to accumulate heavy losses. Earlier this year, I spoke with Unacademy's co-founder Gaurav Munjal. Let's hear what he had to say.
At this point, the 2 or 3 core focus areas are to just get the core business to profitability.
Well, you heard profitability is high on agenda. Edtechs are now talking about capital efficiency, cost cutting and capital runway. As it stands, PhysicsWala is the only profitable edtech unicorn. So how are investors reading this situation? Let's hear it from Rajan Anandan of Sequoia Capital India, which has backed Byju's and Unacademy.
2021 was not a normal year, so you shouldn't peg your business to 2021. But of course, once you've gone through a period of extraordinary, what I call exuberance, which is what 2021 was about, right? So you are going to have to, restructure companies, right-size your companies.
Meanwhile, with schools opening up, more and more students are now returning to offline classrooms. As a result, Byju's, Unacademy, Vedantu and PhysicsWala are all spending heavily to set up physical coaching centers. Yes, K-12 players had to go through some schooling themselves in 2022. But what about the startups that are focused on higher learning and upskilling? They appear to have found investor favor with sustained growth in demand for professional courses, government test prep, and digital skills training. Startups such as Upgrad, Scalar Academy, Adda 24/7, and Simply Learn, among others, have raised more than $1 billion in 2022. While revising their strategy, the K-12 players are now rushing to fill the upskilling gap in their course offering. In fact, An Academy now wants to go a step further and take on LinkedIn by launching a professional networking platform called Next Level. Despite all this, An Academy's Gaurav Munjal has warned that edtech startups will have to write tougher tests. The so-called edtech winter could get worse. With the funding crunch expected to last 12 to 18 months, it remains to be seen if edtech startups can pass the exam or face re-evaluation in 2023. Back to you.
Clearly, it's been a year of tough lessons for the edtech sector, but some of the investors that I spoke to are optimistic and say that by the end of 2023, some of the wheat will be separated from the chaff, and this could result in a major push towards consolidation in the edtech sector. Moving on, it's not all gloom and doom in the startup ecosystem. While we know startups prone to failures is a very high probability, but the year also saw the emergence of some profitable startups. Startups that were not just in the green, but have shown growth and sustainable business models. Listen in to some of the profitable startups we spoke to.
So basically, during the COVID time, recollect, everybody wanted to have no contact, no touch, and so our whole Uber-like experience is all about saying, you book from your phone, you check in from your phone, you pay from your phone, and walk away from the salon without contacting anything. And that really contributed to our growth, because during COVID, everybody wanted to upgrade their technology in that sense. From a growth journey perspective, we've been growing year over year, last 3 years since COVID started, about 70% year over year. And that's, as I said, just the strategy of delivering the Uber-like experience. In terms of size and scale, we are, our overall sales have crossed the 100 million kind of number.
Actually, I think it's a decade-long transformation that's starting to happen. I think we are at a very, very early phase of this transformation. The company is kind of starting to build out scale. Obviously, we're looking for acquisitions, tech tuck-ins, kind of look at how fast can we actually kind of expand from a market standpoint.
Model being kind of scaled up quite sustainably and with a lot of discipline, and therefore the bank also came in as one of our investors. While having said that, yes, we are using this fund to kind of increase our product portfolio. Definitely, so we being a lending company, there is a certain the debt leverage, equity to debt leverages has to be maintained in a healthy equation. So therefore, the equity infusion will further strengthen us to kind of increase our the entire AUM and whatnot. And we are definitely looking to kind of add much more products to our product portfolio, what we are offering to our customers today.
See, currently, FMO has been having a relationship on the debt side with us since 2017. This participation on the equity side is going to, strengthen our capital base, and we are, a strong foundation is being laid for a high growth next year. So we're going to grow by around 20% this year, and the next year growth target for us is close to 40%. So this fresh equity infusion is going to strengthen our overall capital position and also going to accelerate our growth plans.
So we intend to replicate the audio story in the wearable segment and become leaders there. And so the idea for delaying the IPO was to invest significantly in the wearable space. We spoke to investors. We found so much interest in both that even without doing a formal process of fundraising, we were able to secure these funds in a very short amount of time, which shows the confidence and conviction investors have in the both story.
After a remarkable 2021, the current year is what we could call a drag for Indian startups in terms of attracting investments. There wasn't a single billion-dollar check handed out to an Indian startup in 2022, and star investors in 2021 like SoftBank and Tiger Global refrained from mega deals this year. Sample this. 2021 saw over 1,200 deals worth about $35,462 million, while 2022 saw 1,119 deals worth about $23,736 million. Some of the biggest deals of the year included Daily Hunt, which bagged $805 million, followed by Swiggy, which bagged $700 million, and then EdTech major Byju's raised about $665 million, rounding up the three biggest deals of 2022. Finally, let's take a look at the sectors which got the most amount of funding. E-commerce saw 147 deals worth about $5,253 million, which was lesser than the figure that it saw last year, which was in 2021. Fintech saw 228 deals in 2022, which was mildly lower than the 243 deals that the sector saw last year. But enterprise SaaS companies bucked the trend to see about 264 deals in 2022 at about $4,700 million versus the 253 deals that it saw in the previous year. I've listed out the top investments of the year, but Shruti, what about M&A activity? Consolidation across many sectors is what is to be expected?
Yes, absolutely, Arundhati. Smaller startups in the consumer space became acquisition targets for larger unicorns like Byju's, Vedantu, Cred, Zomato, and others. But that's not all. Larger corporates such as the Tatas, Reliance, ITC, HUL, and Aditya Birla also acquired startup players to up their digital game. 2022 saw 229 mergers and acquisitions, 9% higher than in 2021. The enterprise sector saw the highest number of merger and acquisitions within the startup ecosystem. However, the funding winter could see the number of consolidations only increase further. The merger of short video platform MX Takatak with ShareChat's Moj was the biggest M&A deal of 2022. We were tracking these deals on Startup Street. Here's a snapshot.
For us, as you know, we are in the lifelong learning space, and in the lifelong learning space, there are about 100 million plus professionals plus college learners who are going through this lifelong learning ecosystem play. So for Upgrad, we had been largely very much focused on creating a strong B2C presence, and that's what the entire focus for Upgrad had been. But with Harappa coming in, we expand beyond B2C and establish a much stronger and sharper presence in the B2B and the enterprise learning space. That's the number one reason, and that's the number one synergy that we saw. The second thing that we sort of looked at, Shruti, was the fact that we have done a lot of work and fair amount of work in the hard skills domain, whether it is computer science, AI, machine learning, data science, so on and so forth. But with Harappa, we expand into the domain of soft skills, thrive skills, and leadership skills, etc. And that expands the product portfolio for us. And lastly, I would not go away without saying that we do get two phenomenal founders, both Pramath and Shreyasi.
So the first thing that excites me is this is our first brand that you can consume every day.
Okay.
So frequency matters. You can see the MyFitness peanut butter right here. I'm actually a consumer, right? So I've been having it for a long time. What excites me about this space is, look, peanut butter itself is a 600 crore market growing at about 30% year on year. We are the fastest growing brand. The reason we love partnering up with Mohammed, Rahil, Poojan, and many of the other MyFitness folks is they've built a fantastic brand, great customer quality. We had plenty of users. I always look for customer love as the single biggest indicator for actually partnering up with the brand. So we believe that, I think, with our playbook, and Shruti, we've spoken about this before,
yes,
our ability to scale D2C, our ability to go omni-channel, our ability to take this brand global, for example, to the Middle East, all of which I think are going to be very exciting.
We had offers for acquisition right at the start, but I wanted to build Tweak to a certain scalable strength, which is what we have done at this point. And now beyond this, if I want to take the next exponential leap, then I would have to depend on a very strong partner to give me back-end support, technical support.
The key thing is that this is an acquisition which helps us strengthen the CFO suite that we have. In terms of the price, that's not public, but as you mentioned, it's an all-cash deal. The second one is like the team will continue to, all of the team is joining us with the entire IP, assets, customers, and the team, and they will continue to operate independently. But we have like over 4,000 enterprises to take this to. The Simplified team brings in about 100 enterprises to us, and we have 4,000 enterprises to take this product to, this offering to. So we are very excited to go to every CFO and talk to them about Simplified.
Both Picker and Shiprocket both have been, working in this segment for a while. And when it comes to direct commerce in India, it's a very, very large market. Today, if Indian e-commerce is about $70 to $80 billion in total, direct commerce is easily between, 15 and $20 billion from that. And 5 to 6 years ago, this number was less than $1 billion. So it is growing very, very rapidly. And what's happening as a result is, a lot of the needs that the retailers in this segment have are being unmet. And while there is, demand generation platforms like Facebook, there are shopping cart platforms like Shopify helping bring the consumers till the point of checkout, really the post-purchase journey is completely blank. So our, vision, and so is Gaurav's vision, was to build an operating system where we can plug in providers, we can bring in more technology, and we can make it accessible to everybody at large.
On that note, it is time for us to take a short break. But on the other side, we take stock of the startups that took to Dalal Street, the boom in investments in early stage rounds, and celebrities taking the entrepreneurial route. Stay tuned.
Welcome back to Best of Startup Street 2022 special. Listing on the bourses is a major achievement for startups and a sign of a maturing startup ecosystem. New age Indian tech startups were brimming with hope at the start of the year as a record 11 startups got listed on the Indian stock exchanges in 2021. But only 3 startups went public this year. 2022 saw giants such as PharmEasy, MobiKwik and Room shelving their IPOs amidst negative market sentiment. And startups like Paytm, Zomato and Nykaa, which went public in 2021, were caught in the eye of the storm and wiped millions of dollars.
While the funding winter and global slowdown pushed back IPO plans for a lot of startups, we also saw investors shifting focus to invest in early stage funding. While 2022 may not have seen big ticket deals, there was some respite as early stage funding saw a boom. While the number of deals was still lower than in 2021, we saw over 752 deals in 2021, worth about $2,553 million. But in 2022, we saw about 705 deals, which raked in more money at $2,898 million. Some of the most active VC investors of the year were Sequoia Capital India, Axel India, and Better Capital, with Better Capital topping the list when it came to the number of deals it made in the early stage in 2022. Better Capital invested in over 50 startups in the early stage versus only 3 investments made in the previous year.
We always believe that good companies, because of the overall scenarios, what we are going through in India, and being outpaced versus the global peers, we would see equity infusions with the dry powder getting materialized in some manner. But demand for the asset class has really picked up. So we've seen close to 1,000 crores of requirements in the last month standalone, and we've disbursed close to 250 crores a month, which is quite high as per our normal run rates.
What is the reason for this shift, and what's the rationale of betting on companies in the early stages?
I think, frankly, what's happening is money is either shifted to public markets because it's cheaper, or is shifting downwards, towards pre-seed, seed, to try and get into companies very early, which I think is a strategy in most firms, to try and get into companies early, because that's when you can get good ownership.
We are trying to envision what the future of tomorrow is going to look like, in a year, in 2 years, in 3 years, and these companies will become big over the next 10 years. So that's what we're trying to find.
So we are going to make 20-25 investments from the fund too. We have already made 5 investments, which we have announced, and a couple of them are in the pipeline to get announced in the next couple of months. We typically get in at seed stage, pre-series A stage, or sometimes series A stage. So our first check is typically $500,000 to, let's say, 1.5 to 2 million on the higher side. And then we follow on, as our companies grow and raise more money.
We have dry powder of about 40%. So we have room to keep investing for another year or so. At sometime next year, we will start thinking about our next fund. We've had a good run so far. We've had 15 investments, out of which some are looking already at a stage where we are very comfortable with the business model. They're scaling quite well.
A whole host of celebrities turned entrepreneurs and investors in 2022 with an eye on India's startup boom. Out of 102 unicorns in India, Mamaearth, Nykaa, the Good Glam Group, and many others received investment from Bollywood actors. Shruti, I can call you our in-house insider to all things Bollywood. What was that experience like? Rapid fires all around?
Well, absolutely, Aru. It was such good fun. In fact, I enjoyed putting them on the hot seat. But what's most interesting was that a lot of them are women celebrities turned entrepreneurs. From Priyanka Chopra Jonas, Deepika Padukone, Alia Bhatt to Katrina Kaif, we had them all. We have seen them on the big screen, but we got them on the small screen to talk business. Entrepreneurship is clearly wooing everyone. Take a look.
We are global from day one, and it also stems from my own belief as how proud I am of my roots, but also how aware I am of where India stands on the world map today.
I think the tweak of 2025 will see growth in the video verticals. We'll see a deeper penetration into the Hindi market. I feel that we will be able to jump across multiple platforms.
We reached over 100+ stores in the general trade outlets, and I know that there's many, many more that are going to roll out soon. And then, of course, globally soon, we're also going to be making our foray there.
We launched the brand in 2021 in the middle of a pandemic, but it was really exciting because we had an exclusive deal with Target for a year. And then we expanded and we moved to Walmart, CVS, Kroger, Amazon, and now we're obviously expanding to India and coming to a market that I'm really excited about.
Plum for me is very, very special because I sort of like have closely spoken to the team and I know what they strongly believe in, and that is extremely equal to what I believe in my life.
Like an investor, I mean, before you invest in any brand, you will do your due diligence. You will look at, I mean, as basic as a balance sheet, you will look at what their, what are their, how the company is going to grow, what are their projections. So, I mean, I have kind of studied that, but more than that, I think you need to study the man that you're associating with.
Let's do a quick rapid fire. Chief Financial Officer or Chief Creative Officer? What resonates more with you?
I think we answered that question. Yeah. Chief Creative Officer.
Investment/savings mantra?
I would say get good advice, but also stick to your comfort. I think in investment, that's one of the areas I would say maybe, stick to what you feel comfortable with.
Tell us, what does Mrs. Funny Bones think of Elon Musk's takeover of Twitter?
I used to love Twitter. In the beginning, it was a great platform to engage with people. And I feel it became very toxic. There is a Hindi saying, Loha lohe ko katta hai, but I think instead of iron, what would get rid of Loha is rust. So I think Elon Musk is doing the bit of rust quite successfully.
That were some rapid answers, and the rise of the startup ecosystem too has been equally rapid. The startup boom began for India only 5 years back. From 1,000 startups in 2016, we have now raised the count to over 90,000 startups.
Absolutely, Shruti. So there's no better time to be covering startups than now. So we're excited to see what the next year will hold. But on that note, here's wishing all our viewers a very happy and prosperous new year. More news and updates continue on the other side. Stay tuned.
समय कभी किसी का इंतजार नहीं करता,